Hello and welcome to your daily dose of Satoshi's news. Today's date is Friday the 20th of September 2024, the year of 1 million transactions per second or more. Experience the best of both worlds today at betbitcoinsv.com, the best casino and sports betting on chain. Have a little flutter in private using the original protocol and genuine Bitcoin. Right, let's see what we got in store for us today. We've got this article 9 hours ago. It says Satoshi era wallets moved $16 million worth of Bitcoin. So that looks quite exciting. Then we're actually going to go through this this travesty, this BlackRock promotion of GregCoin. Right, good grief. Got to see what's in that. Then we've got a phenomenal video here. So this is the release, an audio release from CSW. Just giving his opinions on some of the Copa case and whatnot. We'll have a listen to that. A little bit 365 days of Bitcoin history, or maybe not, nothing for the 20th. Then we'll just go through some figures and all that, and that will be the end of the show. Right, let's get into it.
Satoshi, like a cowboy in the West, riding on the blockchain that they call the very best. 1 million strong, and transactions flying free. Just wait for the Terra node, you'll surely see.
Here we go then. Right, yeah, Satoshi era wallets move $16 million worth of Bitcoin. Around 250 BTC from Bitcoin's early days were transferred after 15 years of inactivity, revealing the huge rewards reaped by the early miners. The $16 million worth of Satoshi era coins highlights the conviction of pioneering hodlers. Oh, here we go. Right, they're trying to spin it to promote hodling. Good grief. Let's see what the rest of this stuff says. Around 250 GregCoin from the early days of Bitcoin. In fact, they'll be unsplit, so they're not GregCoin. They're actually genuine Bitcoin. So around 250 Bitcoin from the early days of Bitcoin, known as the Satoshi era, were transferred on Friday to 5 separate transactions, each moving around 50 BTC to new wallets. The total value of the transfer was close to $16 million. The coins were originally mined in January 2009, just months after Bitcoin's launch, and have lain dormant since. Arkham blockchain analysis shows the wallets are not linked to Bitcoin's pseudonymous creator, Satoshi Nakamoto. How convenient. The original wallets that move the coins are, notice they all start with number 1. Look at that. They all start with number 1. Do BTC addresses start with number 1 these days? Nope. That's because they're not Bitcoin. But interesting ones. The transfers likely belong to an early Bitcoin miner who acquired the coins when BTC was practically worthless. After hodling them for over 15 years, they are now valued at $16 million. This demonstrates the conviction of early believers who recognized Bitcoin's potential value long before the recent meteoric price rises. The anonymous owner mined and held these coins when Bitcoin was a niche experiment exhibiting remarkable faith. While the original owner remains a mystery, not really, the transfers are among one of the largest amounts of Satoshi era Bitcoin ever moved. There has been no activity sending the coins to exchanges, indicating the owner may intend to continue holding them. Yeah, you wish. But interesting nonetheless. Satoshi era coins. I might actually have to do some digging on those. Let's just try this first one then. Tell you what we'll do. We'll search for that on Watson Chain. Because then we can literally do a block search. Thank you, Watson Chain. It's about time. Right, let's have a look. So what wallet was that? One CGT. Address. Look at that. Jeepers. So that was 2nd of February. That's really early. Considering the network started on the 3rd of January 2009. This is the 2nd of February 2009. Jeepers. Just 4 weeks after. There really can't have been that many miners on the network at that stage at all. What, maybe Craig, Hal, Dave Kleiman, maybe? Jeepers. Yeah, that's mega early, that one. Whew. Fascinating. The transfers, yeah, we've already done that bit. Oh yeah, already read them all. Wow, 2nd of February 2009. Jeepers. Mega early. Right, let's have a look at this then. Bitcoin, a unique diversifier. Why Bitcoin's appeal to investors, that's great coin they're referring to. Appeal to investors lies in its detachment from traditional risk and return drivers. Forward. Let's just enlarge this then. I wonder if we can just close that. Right. Bitcoin has undergone a historic journey over its 15 years of existence, rising from obscurity to become an asset held in varying degrees across the world by an expanding number of individuals and institutions. While BlackRock's first client offering around Bitcoin launched in 2022, the years preceding that represents an important period of study, monitoring, and client engagement for us. As a fiduciary, we seek to provide access and choice to clients to meet their individual needs. As with any other asset class, when clients express a need for access, we work to offer them more investment options, but offering our clients choice is a first step. We must also closely examine performance and engage in our own research to educate clients. Yeah, you should do your own research. In the case of Bitcoin, we strive to bring this same measured approach to our clients as they seek our insights on this highly unique and relatively novel asset. What? As if they've got any insights on it. We believe that Bitcoin, via its nature as a global, decentralized, fixed supply, non-sovereign asset, has risk and return drivers that are distinct from traditional asset classes. and are fundamentally uncorrelated on any long-term basis. We maintain this conviction even as a short-term market trading behavior occasionally diverges, in some cases profoundly, from what Bitcoin's fundamental characteristics would suggest. We observed this is as recently as August 5th, 2024, when Bitcoin saw a one-day drop of 7% alongside a 3% fall in the S&P 500, as global markets experienced a sharp pullback related to the unwinding of the Japanese yen carrying trade. This episode coincided with a series of Bitcoin-specific events related to long-pending bankruptcy distributions and liquidations. Genesis Mt. Gox, that had already been unfolding over the preceding 3 days. That was then exacerbated by the scramble for liquidity caused by the global market sell-off that was taking hold. As has been a common pattern during these occasional episodes of short-term, sharply negative co-movement with equities, Bitcoin's price rebounded, overtaking its level from before the sell-off within 3 days. We view this pattern as instances of fundamentals eventually prevailing over short-term leveraged trading reactions. As Warren Buffett said, the stock market is a device for transferring money from the impatient to the patient. This wisdom has also tended to be true for the Bitcoin market throughout its history. We present in the enclosed our best attempt to capture, in response to great interest from our clients, the dynamic of Bitcoin today as it pertains to risk, return, and portfolio interactions. We do so in recognition of the early stage Bitcoin as is at in its journey, and the rapid they're calling it early stage of its journey, and the rapidity with which its adoption and understanding by global investors community is evolving. Alright, just small print there. What does that say? Bitcoin fell 5% on August 2nd, 2024 after Genesis announced the distribution of 1.1 billion in BTC to creditors on August 3rd and 4th, 2024. Bitcoin fell a combined 5% as a large market began undertaking forced liquidations of its BTC and Ethereum holdings. Bitcoin fell a further 7% on August 5th, 2024, the same day the equity markets ended a sharp correction. Source Bloomberg Bitcoin spot price as of August 2024. 2. Bitcoin claimed its August 5th losses by August 8th, 2024, and regained its level from the start of the month on August 25th, 2024. The S&P 500 reclaimed its August 5th losses by August 13th, 2024. Source Bloomberg spot price as of 2024. Past performance does not guarantee future results. Absolutely doesn't. Key points. Number 1, investors considering allocating to Bitcoin are grappling with how to analyze it relative to traditional financial assets, given Bitcoin's unique properties and limited history. 2, Bitcoin with its high volatility is obviously a risky asset on a standalone basis. However, most of the risk and potential return drivers Bitcoin faces are fundamentally different from traditional risky assets, making it unfit for most traditional finance frameworks, including the risk-on versus risk-off framework employed by some macro commentators. Bitcoin's nature as a scarce, non-sovereign, decentralized global asset has caused some investors to consider it as a flight to safety option in times of fear and around certain geopolitical disruptive events. 4. Over the long term, Bitcoin's adoption trajectory is likely to be driven by the intensity of concerns over global monetary stability, geopolitical stability, US fiscal sustainability, and US political stability. This is the inverse of the relationship that is generally attributed to traditional risk assets with respect to such forces. Introduction. Is Bitcoin a risk-on or risk-off asset? That's one of the most prevalent questions our clients ask us as they consider investing in Bitcoin for the first time. People still getting into it for the first time. The answer, we believe, is that Bitcoin's unique nature makes it unsuitable for this and most other traditional finance frameworks, and that Bitcoin's long-term return drivers are fundamentally uncorrelated with other sources of portfolio returns. While Bitcoin has been volatile and has seen short episodes of co-movements with equities, particularly during the episode of sharp shifts in the US dollar, real interest rates or liquidity, Bitcoin's long-term correlation to equities and bonds has been low, and its long-term historical returns have been vastly higher than all major asset classes. Over extended time horizons, we believe Bitcoin's adoption drivers are likely to be distinct from, and in some cases inverted with, the global macro factors that drive most traditional financial assets. In this paper, we seek to examine this dynamic. This will be fun. What a load of crap. Why Bitcoin matters. First, it's important to ground ourselves in the fundamentals of what gives Bitcoin its relevance, as if they know. With its creation in 2009, Bitcoin became the first internet-native monetary instrument to gain broad global adoption. Its technological innovation was the creation of a form of currency, no, not currency, it's money, that was digitally native, global, scarce, decentralized, and permissionless. Because of these attributes, it produced a major breakthroughs to multiple centuries-old problems that other forms of money have struggled with. 1. Bitcoin's hard-coded supply cap of 21 million. Yeah, the core are trying to break. Unit means it cannot be easily debased. 2. Its global digitally native nature means it can be transported anywhere in the world at near real time at net zero cost, transcending the frictions long inherited with moving value across political borders. 3. Its decentralized permissionless nature made it the world's first truly open access monetary system. What makes Bitcoin relevant? Persistent historical challenges around money. 1. Prone to inflation and debasement given a non-fixed supply. 2. Difficult to transact across borders. 3. Access limited to one's particular country, controlled by central authority. Alright, and what Bitcoin made possible: fixed a maximum supply of 21 million units, with supply growth declining every 4 years, digitally native and borderless, permitting near instantaneous global transfers of value, first truly open access global monetary system. For illustrative purposes, 1. Bitcoin white paper, a peer-to-peer electronic cash system, 2008, and CoinGecko as of July 2024. Forward-looking estimates may not come to pass. There is no guarantee that the current 21 million supply cap of outstanding Bitcoin, which is estimated to be reached by approximately the year 2140, will never be changed. Look at that. Look at that. There's no guarantee that it won't ever be changed. Hold on a minute. I thought you were just saying that it was fixed. Fixed maximum supply. Now you're saying that there's no guarantee that it won't ever be changed. Are they putting that in the small print because they know something we don't, like I just said? Sounds like it to me. While other crypto assets have since been built on the back of Bitcoin's original breakthrough, in many cases, in pursuit of a wider breadth of use cases, there has been a global coalescence around Bitcoin as the preeminent asset in the space. This has given it a position uniquely amongst the crypto asset universe as a global monetary alternative and an asset with credible scarcity. Bitcoin's path to 1 trillion in market capitalization. Yeah, we're going to pump it with Tether. Despite Bitcoin's remarkable rise and significant global adoption to date, its potential ultimate development into a widespread store of value and or global payment asset remains uncertain, and Bitcoin's evolving market value reflects that uncertainty. Bitcoin outperformed all major asset classes in 7 out of the 10 years, leading it to an extraordinary return in excess of 100% annualized over the last decade. This performance was achieved despite Bitcoin also being the worst performing asset in the other 3 of those 10 years, with 4 drawdowns in excess of 50%. Through these historical cycles, it has shown an ability to recover from such drawdowns and reach new highs despite these extended bear market periods. These movements in Bitcoin's price continue to reflect in part its evolving prospects through time of becoming adopted on a widespread basis as a global monetary alternative. Right, let's see what's on the small. Let's see what's in the small print here. So 3. The most notable previous attempt to create a decentralized digital money alternative was led by cryptographer David Chon, who founded the company DigiCash in 1990 to launch the first fully electronic money, eCash, in 1993. eCash peaked at 5,000 users by 1998, leading the company to eventually shutter and declare bankruptcy in 1999. Meanwhile, an estimated 580 million people around the world today own crypto, of which Bitcoin maintains a 50% market share. That's from the source, the European Commission. The story of DigiCash and its eCash as of September 18th, 2019. Bitcoin Magazine via Nasdaq. The Genesis Files, how David Chalmers' eCash spawned a cypherpunk dream as of April 2018. Crypto.com, global cryptocurrency owners grow to 580 million through 2023. As of Jan 22nd, 2024, Bitcoin represents 50% of the market capitalization of the crypto asset universe, despite there being more than 20,000 other crypto assets now in existence. That's source Coin Metric as of June 30th, 2024. 5. Past performance does not guarantee future results. Performance of Bloomberg Bitcoin spot price compared to performance of major liquidity asset classes available to US investors, as reflected by S&P 500 Index, Dow Jones, Emerging Markets Index, Bloomberg US Aggregated Bond Data Index, Bloomberg US High Yield Corporate Index, Dow Jones Commodity Index, and Bloomberg Gold Spot Rate. That's source Bloomberg and BlackRock calculations as of April 30th, 2024. 6. While Bitcoin's returns through the last 5 years of its existence, 2009 to 2014, were even more extraordinary, we believe it is most appropriate to focus only on the most recent 10 years of returns, which is 2024 to 2014, given the unique circumstances around Bitcoin's emergence from nothing to a real working network. Bitcoin's long-term performance, so this is like 2010. Yeah. Past performance does not guarantee future results. Represents a Bitcoin price performance from July 19, 2010 to July 31st, 2024. The inception date reflects the launch of the first Bitcoin exchange, Mt. Gox. That's from source Bloomberg's Bitcoin spot price as of July 31st, 2024. An uncorrelated asset, Bitcoin reflects the little fundamental exposure to other macro variables, explaining its low long-term average correlation with the equities and other risk assets. While there have been brief periods where Bitcoin has seen its correlation spike, particularly around episodes of sudden shifts in US dollar, real interest rates, or liquidity, these episodes have been short-term in nature and have failed to produce a clear long-term, statistically significant correlation relationship. Bitcoin has exhibited low historical correlations with US equities, with periods of dislocation. Alright, yep. Bitcoin in red, gold in gold. Alright. Bitcoin as the first decentralized non-sovereign monetary alternative to gain widespread global adoption has no traditional counterparty risk, depends on no centralized system, and is not driven by any one country's fortunes. Yeah, apart from BlackRock's fortunes when they pump the price with Tether. These properties make it an asset that is largely detached on fundamentals from certain critical macro risk factors, including banking system crises, sovereign debt crises, currency debasement, geopolitical disruption, and other country-specific political and economic risks. Over the long term, Bitcoin's adoption trajectory is likely to be driven by the degree to which concerns rise and fall over global monetary instability, geopolitical disharmony, US fiscal sustainability, and US political stability. Because of these attributes, Bitcoin has been seen by some investors as a flight to safety in times of fear amid some of the most disruptive global events over the last 5 years. Notably, in some of these instances, Bitcoin first exhibited a temporary negative reaction before subsequently rallying. In our view, these short-term trading reactions, which are often difficult to explain based on fundamentals, can be attributed to a combination of 1. The fact that Bitcoin is an asset that trades 24/7 and sells to clear near instantaneously, making it a highly saleable asset during periods of stress, liquidity, and traditional markets, particularly over the weekends. 2. A function of the still immature nature of Bitcoin and crypto asset markets and of investors' understanding around Bitcoin. In most instances, including with the recent a global market sell-off of August 5th, 2024, Bitcoin has recovered back to its prior levels within days or weeks, and in many cases has rallied further as a recognition of the positive potential impact of such destructive events on Bitcoin's fundamentals begins to predominate. Right, so this is SPX, gold and BTC, 10-day return. So this is US Iran escalation. So that'll be the S&P index. Right, okay. So these are the how it compared in these different events. COVID outbreak, 2020 US election changes, Russia invasion of Ukraine. Yeah, had to put that one there, didn't we? US regional banking crisis and yen carry trade unwinding. Let's have a look. So Bitcoin outperformed them. Yeah, even though it's Greg coin. So it looks like they're actually probably trying to push people into this Greg coin. Yeah, it's going to be shocking. What's this? They're mentioning Black Monday there. Spot price and index performance. Is that SPX? Spot price index? Or S&P? Spot price and index performance is for illustrative purposes only and do not reflect any management fees, tradition costs or expenses. Indexes are unmanaged and one cannot invest directly in an index. Past performance does not guarantee future results. Investment comparisons are for illustrative purposes only. 1. The US government killed Iranian commander Qasem Soleimani in a drone strike on Jan 3rd, 2020, leading to a subsequent escalation in US-Iran tensions. Source: Council on Foreign Relations. That's Rockefeller creation. The Dow Jones Industrial Average fell 10% on March 11, 2020 amid COVID-19 fears. The index's worst drop since Black Monday of 1987. Yeah, alright, get all those. US debt dynamics re-enter focus. Along this vein, the growing concerns in the US and abroad over the state of the US federal deficits and debt has increased the appeal of potential alternative reserve assets as a potential hedge against possible further events affecting the US dollar. The dynamic appears to be also taking hold in other countries where debt accumulation has been significant. In our experience with clients today, this explains a substantial portion of the recent broadening institutional interest in Bitcoin. So this is US gross federal debt trillions. US debt. Bitcoin is still a risky asset. None of the prior analysis negates the fact that Bitcoin on a standalone basis is still very much a risky asset. It is an emerging technology that is still early in its adoption journey towards potentially becoming a global payment asset and store of value. Yeah, because they don't want it to be a peer-to-peer electronic cash system, do they? Bitcoin has also been violated and subject to a myriad of risks that include regulatory challenges, uncertainty over the path of adoption, and a still immature ecosystem. The key point, however, is that these risks are unique to Bitcoin and not specifically shared by other traditional investment assets. Bitcoin, as such, is a particularly poignant case study in why simple risk-on versus risk-off frameworks can lack the nuance to be broadly useful. From a portfolio perspective, this is why Bitcoin held at modest allocations can have a diversifying effect on a portfolio, whereas a large position size, its equivalent standalone volatility, starts to have an outsized impact in increasing portfolio risk. All right. And conclusion, while Bitcoin has shown instances of short-term co-movements with equities and other risk assets, over the long term its fundamental drivers are starkly different and in many cases inverted versus most traditional investment assets. As the global investment community grapples with rising geopolitical tensions, concerns over the state of the US debt and deficits, and increased political instability around the world, Bitcoin may be seen as an increasingly unique diversifier against some of these fiscal, monetary and geopolitical risk factors investors may face elsewhere in their portfolios. Contributors Derek Diamasi, Emily Fredericks Goodman, Wendy Hugh, and Ashley Sadler. What's this? Buying and selling shares of ETPs may result in brokerage commissions. I wonder if they're going to mention anything about ETFs. Always good to read the small print. I might come back to that. Oh, something about ETFs here. This performance must be preceded or accompanied by a current prospectus. Investors should read it carefully before investing. Investing involves a high degree of risk, including possible loss of principal. An investment in the trust is not suitable for all investors, may be deemed speculative, and is not intended as a complete investment program. An investment in shares should be considered only by persons who can bear the risk of a total loss associated with an investment in the trust. The iShares Bitcoin Trust ETF is not an investment company registered under the Investment Companies Act of 1940. Why not? And therefore is not subject to the same regulatory requirements as mutual funds or ETFs registered under the Investment Companies Act of 1940. So the iShares Bitcoin Trust is not an investment company registered under the Investment Companies Act. So it's not an investment company. The trust is not a commodity pool for purposes of the Commodity Exchange Act. Before making an investment decision, you should carefully consider the risk factors and other information included in the prospectus. What does that mean? It's not an investment company. Oh, so it's a trust. So you may be buying shares in the trust? Something that smells fishy to me. Smells really fishy. BlackRock Inc. or its affiliates, all rights reserved. BlackRock and iShares are trademarks of BlackRock Inc. Or its affiliates. All of the trademarks are those of their respective owners. Alright, well that's the 32-minute show, so we'll just sort of wrap it up there quickly. But just to give you a taster of what this is.
Let me be clear with you. Bitcoin wasn't just a tech experiment. It was a revolution.
Loving that. Bitcoin wasn't just a tech experiment, it was a revolution. Absolutely was. Words from the creator himself. Just whiz through these figures here. Yeah, $48. Oh, look at these juicy block sizes coming through. Look at that. 200 megabytes, 252 megabytes. Come on. Come on, beautiful, beautiful. Looks like hash rate's just gone up on BTC there. It's 82,000 times cheaper to transact on Bitcoin than Gregcoin. You're mining Bitcoin at a 35% comparable loss to Gregcoin. That's because, who wants Gregcoin? Daily accumulated Bitcoin growth by network. Look at that. And this was a quote from Satoshi Nakamoto. He said, "It is strictly necessary that the longest chain is always considered the valid one." And where's the longest chain here? Can you see the red line? Oh dear, oh dear. That's all you need to know. Right, let's have a look at the politics here. Global hash rate 7 days. Global hash rate 24 hours. Gregcoin hash rate other miners 1.39. Bcrash other miners almost 60% on there. Fisher price cash, who cares? And Bitcoin can't really tell what's on CoinDance. So we'll just quickly look at what's on chain. Oh, looking good. Tau 48%, upping the ante. QD Link 24. Kuv down to 23. That's a surprise. Wow. Gorilla Pool 3.1 and Mining Dutch 1.55. Tau, look at that, 48. And QD Link up to 24. Kuv reducing their hash rate on there. Let's have a look at the market cap. Oh, just see what's gone in here in the last 24 hours. So that's gone from 118.9 to 100. So 100 million. 100 million's just gone in today. So a little pump there. Let's have a look at the Neil Oliver video. It's now got 156,346 views where he mentions BSV. Excellent. Let's have a look at Bitcoin versus Gregcoin. Just trending along sideways there on Orange Gateway. Bitcoin versus USD. It's just up over the last 24 hours. Check that on DXS app. Yep. It's trending down against Gregcoin over the sort of last 24 hours. Let's have a look at that against USD. Up and away kind of thing. Let's have a look. So we've got the overall market 2.2 trillion. So it's gone up like literally 2 billion. Oh no, 203 billion. It's gone up by. Good grief. Yeah. That's yeah, 203 billion. That was just 2 trillion the other day. Now it's 2.2 trillion. So oh yeah, that'll be due to the market price of Gregcoin. Gregcoin's gone now got a market cap of 1.2 trillion. Trade volume just 2.5% though. It's not very much at all. Let's have a look at Bitcoin then. See where it is. $48. Only $1.3 million worth of asks needed to move the price 2%. Alright, looks like the price is just on its way up. Right, there we go. That's a 35-minute show. We shall have to leave it there. Hope you enjoyed it. So as ever, if you enjoy these updates, please ding your donations for your appreciation to either Satoshi@sendme.com, handcash.io, simply.cash, relasia.com, rockwallet.me or senti.ch. We'll leave it there. Hope you enjoyed it. As ever, be aware, take care, stay safe out there, and we'll see you in the next one.